Get things started. Good evening, guys. KenLongTortoise Capital Nightly Strategy Podcast for November 21st, 2024. We'll start with a couple of sniper trades of the day. This is one of my faves, International Paper, 10-minute chart. Here's yesterday's close. Here's the gap open. Here's the OR10. About 40 minutes into the day, it's given me rising lows, found support at the 5-day VWAP. The intraday VWAP is reversing. The RL10 is starting to slow and turn. Gives me a 1, 2, 3 entry at the skin of the dragon, so I take that. My first targets are going to be the Bollinger Band mean, then the PSAR. Then if that all succeeds, I'm going to be looking for the top of the dragon, then the top of the RL10 turn. So those are the 4 price targets to the upside that I have in mind at the moment of the trade. That's the standard risk in IP, and it's geared to the bottom of the RL10 turn. It gets to the Bollinger Band mean, starting to stall. Oh, continuing to grind, just following it. Comes back and crosses the dragon. RL10 rolls over, hits the PSAR, orderly move, about a 3R move. International Paper, I mean, as boring as it can be. Love it. Next one is 10-minute on, this is US Steel, which was in a critical state from yesterday. There's that was yesterday's kind of panic selling into the close, which stabilized right here. This is the 150-day and the 10-day anchored VWAP. Here's the 30-day anchored VWAP. So there's a lot of folks that would treat that as a reasonable fair value. It opens and closes in that opening 10-minute range, like right there. The next bar opens up and we're going to go long. The OR10 breakout. Standard risk box. After it has a nice gain, I take the skin of the dragon exit. I would not be offended if you elected to take this exit here. If you do, you got to re-enter not later than here, because that gives you a 1, 2, 3 entry. And it would have crossed the 3-day anchored VWAP, and it's still on the south side of the 30 SMA, and your upside is still yesterday's VWAP and then yesterday's dragon peak. So if you decide to get out here to cash 1R, not offended. You got to re-enter right there. That's the key to sanity. After this exhaustion move, that last little 3 bursts, it falls like a stone right back to the skin of the dragon. That makes it feel like the run is done. I would not be offended if you had seen this last little candle after this 30-minute excursion, and it couldn't really get much higher, and then closes at the bottom of that bar and then starts selling. If you exited anywhere in that bar, good on you. But you got to get out not later than the skin of the dragon in order to preserve that good move. We had some swing trades posted. Let's see if we can find these. All righty. These are from Tim. All right, he's got a split screen here. This is his daily bars over here. He's looking at this little move right in here. It terminated in a doji. He's trading inside that large bar. So this is where that doji formed right there. So just want to highlight that part. So you got almost a 5DD that terminates in a doji. There's your 10-day high at 150. So he has a really nice reward to risk ratio on this one. And he gets the initial burst long. He ends up getting long here. It closed really well, but then it gapped down and started selling off. So he exits here to preserve a 0.2 R. I do not disagree with that. If this was one of your standard tradables, Airbnb, then when it makes that morning hook, you might have been able to get inside that move and play that on the shorter time frames. But that's only if it was one of your usual intraday suspects. He's got a lot of small caps on this one, so these are ones that he's familiar with. He's got um, Tim. When you're out there listening, I don't know what trade setup that is. Maybe it's a return to the 10-day. Maybe this could be a max range or max pain range compression. If so, give me the label in here of what the pattern is so we can evaluate that. I don't disagree with the idea that after the sell off and reversal that there's an opportunity in here, but it's such a thinly traded inexpensive stock. I don't really like trading outside of the large caps and in some cases mid caps because I just think there's too much randomness and there's not enough money being slung at it to make it worthwhile. So I don't really recognize what that pattern is. It's so late in the day that it's not really a kata two that I would take. If it's a swing trade, then your stop has got to be down here, and then this rapid sell off the next day is actually a profit preservation, which I don't disagree with. But there's just so much randomness in here. There's no real market pushing that thing around. It's just whoever's trading Jumia Technologies, whoever they are. The farther you get away from S&P and the large caps and the big fat indexes, the less validity there is in the use of statistics to predict or describe market herd behavior, and that's why I generally steer clear of the small caps. But we'll drive on. TWLO, Twilio. Now this looks like right. So there's a big gap up. Leg one, it pulls back and is making a kata two on yesterday's big range. So he's actually trading day two of the. No, I'm sorry. He's trading the second day. Oh, the first. I'm sorry. Let me say it again. He's trading the first day momentum out of that little doji. So he's actually entering on that bar, and he's still holding the trade here. So on the 20th, he notices at the open, he's getting a continuation pattern, an SSC. He's putting his stop down here by well below low of the day. I would be down here to be honest. I think this is a little tight, but I would prefer to see you here. And then if that RL10 turn breaks, then you could be short. So I think I'd probably use this stop rather than this stop, but it works out well. You get that first nice move. If you exit here when it comes back to the VWAP to preserve, then you have to re-enter today when it breaks out and continues. He was able to hold this overnight, and then the next day, today, it's moving up and then has stabilized, and now it's well above the previous Bollinger Bands in here. So I think of that as free and clear. And he's holding 2.5. He's using a PSAR. He's using a trailing stop of the third previous PSAR dot. So that's going to be approximately here. So tomorrow, if this goes, it could really go. But if it doesn't, if it starts failing, you're going to find yourself getting out. I guess it's right here, which is like the 30 period SMA or the 10 period SMA anyway. I think that's in good shape. Um, for Twilio, holding 2.5. I would look at maybe an intraday turbo tomorrow. Like if that holds and then breaks above this peak of the RL10, I'd look at adding an intraday position to take advantage of third day momentum. But then I would be really inclined to exit that tomorrow after two really strong days and a third day momentum. I'd be ready to bail. XMTR exometry. This is a nice little max pain range compression. It has that nice leg up, which says there's a lot of buyers. It's an orderly pullback to the PSAR and just through the dragon, and it holds and it terminates in a tiny little doji in there. That was yesterday's little doji. It breaks out above that. He waits for the almost like a kata 2 entry here. So I think that I probably would have been in like this early, but that's still a good entry on a kata 2. He gets a nice move. I'd have been really tempted to cash right here and not hold that overnight, but he's holding. I get that stop is so tight. 3R. That seems a little large to me. I'm not sure that. Let me take another look at that. Yeah, that's if you're holding this right here and your entry was there and that was your risk. This is more like a 1R cushion. At the peak, you might have had 3R. It made a 3R move out of this, but our entry was late, so I'm reluctant to hold with just a 1R cushion overnight. But if this was just a swing trade position size, then you're in really good shape. If I had done this with a core and a turbo, so maybe like 200 shares and 800 shares or whatever your ratio is, 4-1, then you enter the whole position here. As this starts rolling over, you offload the intraday shares, and then the money that you made on those will pay for the overnight risk on the remaining 200 shares. Then you have this cash that's ready to get right back on. Like if this holds and then starts to take off again, you put those 800 shares right back on, and now you've protected against the overnight risk. You've still kept a little taste so that you're emotionally connected and you take advantage of any favorable gap, but you manage your risk in that way. All right, we'll take a quick look at the daily. See what we got here. So the 150-day look back, we had the Trump bump right here, and we've got the RL10 turning, and it closed pretty well. So this is actually a kata 2 forming. So if we get any kind of upward move, that's a kata 2. If we wait for it to get above 600, that's an emerging dragon, and then it's off to the races. So this is this was a vote to the upside today. It's easier to see on the 30-day look back. You can see we had about 4 days of indecision inside here. The Bollinger Band mean held. The PSAR is still cruising up. Notice that the PSAR doesn't flip because the RL10 didn't go through it. The price of the and the tails tickled that, but that's not enough to make it flip. What makes it flip is if the RL10 comes through the PSAR, and it has held by the thinnest of margins, but it held, and now that's supporting that move to the upside. Now, if we can get above the 5-day high and the skin of the dragon here at 595, then it's got a good chance to run to 600, and then this will be the key test. That's a psychological level. If that works, then it probably can get to, that looks to be about 604, 605 at the very peak of the RL10. And then that's any price north of that is genuinely a decisive move upward. So there's enough upside here to justify still taking the long. I like the PSAR -1 stop right here. That's where I would be trying to protect, that move if you're still holding profits from that move. 30-minute chart, you can see today was after some initial waffling in here. It actually has a pretty decisive move to the upside and closes very well. So today was a vote to the upside. Let me go back just for a second. The prices, or I'm sorry, the closing price. Closing price is above the all of the anchored VWAPs. So that's a favorable sign as well. So you got the 30, you have the 5, the 3, and the 10 here. And when price closes above all those, that really feels like it wants to keep going. And again, it's got to get above 600 to be interesting. Dashboard 1, bullish normal, strongly overbought. Price with respect to the river looks good. The risk Z is still giving us favorable indications for long side. It's still risk on. Emerging markets and Europe still buy on dip opportunities. Walmart was really strong today. If you look at the 10-day min pain, these are the things that are dominating. Old school tech, Walmart, American Express, Procter, and Exxon Mobil. You got some weak tech down in here, but it's Main Street right now. Things like U.S. Steel, International Paper, Walmart, conservative large caps. Dow tactical summary still got a healthy number that are auto framered better than 2-1. You had real strength in Walmart today, hitting a new 6-month high. That's what this means. It's broken out of the previous trading ranges of 10-day, 1 month, and 3 month, and 6 month. It was a solid 1.8% today. Tesla was amazing. I'm sorry, that's the volatility. So it was down a fraction. It's been on a tear, but today was the first little bit of a pullback. Merck, IBM, Home Depot, Goldman, Caterpillar, that's all Main Street. But meanwhile, our story stocks of Tesla, Palantir, Microsoft, all on the downside. This one was troubling that McDonald's should have been better today, but they've actually had a pretty bad string, and it was one of the big time losers today. So, and at 3-1, it's now starting to set up as a possible value play for short term swings. So that'll be on my mind. I like the strength in Caterpillar, and it's still 2.7-1. That's like the best of both worlds when it's a percent winner and it still has a favorable upside. That's hard to beat. Situational trading there. In the ETFs, strength in energy and a little bit in uranium, micro weakness here in Brazil and Latin America and Mexico for that matter. A healthy number of ETFs that in the globals that are as much as 7.5-1 in emerging markets, 4.5-1 in the Euro Asia blend. So a lot of the globals are trying to play catch up. US is still leading the way. There's your daily framing data from the auto framer. plenty to choose from. United Health and gold. United Health, the whole healthcare sector, just suffering from their fear of what RFK Jr. is going to do to them, and properly so. So that's a long term underperforming sector, in my opinion, if he gets confirmed. Um, Only 5 symbols here in the TC2000 Sniper Auto Framer. I like Qualcomm automatically because it has a 4-to-1 reward, standard reward to risk, and today it was up 0.77. So it has a good move left available to get to the 10-day high, and it already started that move with a 0.77 move today. So that's not bad. Devon Energy might be a candidate for some strength tomorrow. It was up 1%. The energy sector was strong. So that could be a nice play for us and one of our standard tradables. Mostly winter and fall in the ETFs, but an equal mix in the US. And that's just showing you that the US large caps have more in the summer and spring than the globals. That means the strength is in the US. Walmart, Procter, Disney, Home Depot, that all of these that are in the summer, well, with Chevron and ExxonMobil, that's Main Street. That's not tech. The 2-day NDX shows strength is returning and starting to recover the early joy of the Trump bump. So Walmart, Oracle, Procter, and AI really dominating here. And then in the ETFs, finance, energy, and oil exploration. But really a lot to choose from today. The only weakness was in our South American triumvirate here of Brazil, Latin America, and Mexico. So that's a sector problem. Maybe thinking about paying the cost of mass deportations. Frog list. These are the ones with high trading value. Marijuana, 13.2%. Even though the frog quality number is low, that daily volatility that's got to get your attention. And otherwise, the usual suspects: Intel, Clean Energy, Tesla, Palantir, Nvidia, rounding out the top 10. Come on. There we go. And just nothing special on the market mosaics. Yeah, the recovery in price just feels good. So it's riding the upper skin of the river. That's favorable on price. Your volatility is still favoring an upside moves. If it were to resume, that's like a cotta 2. So this is still pretty good. The RL10, the Z-score of the RL10 has reversed at the normal level. And when it reverses from these sell-off levels, you almost always get a nice bounce. So that could be a 3-day bounce, like for tomorrow and into early next week. The slope of the RL30 is recovering, and the RL90 is just saying, "Hey, Trump's in charge. Daddy's home. Let's go." So everything's looking cautiously optimistic and good for tomorrow for a follow through. Friday, tactical Friday. Be judicious about what you're holding overnight. I think tomorrow's big favorable moves for us. All right, that's everything for today. Let's get this published and posted, and we'll see you tomorrow. Take good care. Come on, idiot.